Welcome to Kaplan Professional's July Economic Update. I'm Dan Purves. Today we're talking to HSBC's Australia and New Zealand Chief Economist Paul Bloxham about commodities and the construction boom. Paul, thanks for being here.
Thank you.
The RBA is predicting growth of more than 3% over the next couple of years, but other economists think this is too optimistic. What is your prediction for Australia's economy's growth and why?
We're quite optimistic about the growth outlook as well, and our numbers don't look too dissimilar to the RBA's own forecasts. And the view we've had for a while is that the thing that's really going to lift growth going forward is that we've seen a big decline in mining investment in recent years that is now coming to its end. And so actually it's that big drag disappearing that is the major reason why we think growth is going to lift. Commodity prices have already lifted, the mining sector is already back to profitable, that's lifting national incomes, but also mining investment, which has been falling and been a drag on GDP growth each year for the past 6 years of about 0.75% of GDP. Well, looking forward, that drag will start to fade, and by the time we get to 2019, it should be barely a drag at all. So you get that 0.75% back in terms of your GDP growth, and that's one of the key reasons why we think GDP growth will lift, and we think it will lift to an above 3% pace as well.
Sydney CBD is going through an unprecedented construction boom with more than 31 cranes in the city centre. And Sydney as a whole has more than half of all cranes operating in Australia. Why is the city experiencing such development, and where will this lead?
Well, I think there are two key things at work here. I mean, the first is that population growth has been quite strong, and that's continuing to drive demand. And that's one of the key reasons in particular that we've been building a lot of apartments in recent years. That's extended also a bit beyond that. Of course, we've got the high crane count in part because of commercial buildings, but a lot of it is this apartment construction story. And I think the other element of this story is we spent a long time in Sydney not building very much. When the mining boom was really strong back in the earlier part of this decade, when mining investment peaked in 2012 and was ramping up, we had quite high interest rates, and that was actually slowing down a lot of activity in other states and in other areas like the housing market. So we weren't building very many houses back then, but back then we also had population growth that was quite strong. So we accumulated this undersupply of dwellings, and so what we've been doing in recent years is catching up. We've been building a lot more dwellings to try and catch up with that undersupply and also meet the new demand that comes from population. So in our view at least, there isn't a clear sign that in all this building that we're doing that we're actually delivering an oversupply. We think what we're doing is actually working off a previous undersupply, and that explains a lot of what's been going on. Commercial building has partly reflected that there has been strong demand for commercial properties, particularly in Sydney and in Melbourne as well, actually. But also the commercial property space has been quite well supported by the fact that global interest rates have been very low in recent times. And of course, commercial property is a global asset. So if global interest rates come down, then of course the money that's floating around the world looking for a return and in a search for yield moves to the areas, the countries where you've got better returns for those assets. And of course Australia has a starting point which has higher yields on commercial property, so there's been higher demand for Australian commercial property. Those things have combined to support the commercial property market in Australia.
Battery technology is going through a boom which has caused prices in commodities such as lithium to surge. What's your view on how this will develop?
Well, these battery-related commodities are the most exciting commodities on the planet at present. Lithium and cobalt in particular, we've seen very strong price rises in this space, and we've been describing it as a super cycle. You haven't got a super cycle going on in other commodities. That super cycle has come to its end, but in those commodities you are seeing clear signs that there is a super cycle. Now, what we mean by that is that you've seen very strong demand, and the strength of demand is coming off the back of increasing projections about demand for electric vehicles. That looks to be very well supported, in particular because a range of countries are now putting in place policies to actually move more towards electric vehicle usage. So there's very strong demand expected to be for electric vehicles. And then, of course, for those commodities, for lithium and for cobalt, we haven't built enough supply capacity to provide those commodities at present. Now, there's plenty of those commodities available, but there are constraints on the supply side. So that's seen the prices rise significantly. Looking forward, we do think that those prices are going to hold up pretty well for a while, because the investment cycle is in an upswing. There's a lot of investment going on, but it will take a number of years before that investment actually brings new commodities to bear. And of course, at the same time, the demand estimates for those commodities are continuing to remain pretty strong.
Thanks again for being here today, Paul.
Thank you.